Warren Buffett is buying gold, but wait, it's not what you think. Like most things, it's the small details that make all the difference. And in this video, I'm going to show you what almost everyone's missing, and most importantly, how this small difference is the key to us making huge profits in gold. And I'm even going to give you what I see as being the very best gold opportunity in the market today. So stay tuned. All right, welcome back. If you're new to the channel, my name is Mark Moss. I believe the only security we have in life is for us to take responsibility for ourselves because the system is broken. No one is coming to save you. And that's why we must learn to make money, grow our money, protect our money on our own. Now, if you agree, want to hear more about those topics, click the like button so more people hear about them as well. Of course, hit the subscribe button and the bell notification so you're notified every time I put new videos out. Now, as we were talking about, the news headlines have been completely dominated with the news. Everywhere you see, Warren Buffett buys gold. That's what everybody's saying. But like most things in life, the headlines don't tell you the real story. Now, the details are really what gives us the insights. It allows us, well, in this particular case, the details are what allows us to make so much money. Now, I know many of you might not care about what Warren Buffett is doing. He's old, he's washed up, whatever, but he is the most successful and the most famous investor in the world. And I get it. A lot of people think he's been out of touch, maybe the last decade, maybe the last several years. And we've even seen people calling him out. There's gambler turned trader, which is still a gambler in my opinion, Dave Portnoy. He calls him out, says he's washed up. He says that he's the new greatest. I think he said he's now the captain of the markets or whatever. But just wait a minute here. Hang on a second. Before he goes on that big of a rampage and declares himself the new winner, Buffett's got a lot of money. He has so much money that you probably don't realize that when you have as much money as Buffett has, it becomes very hard to invest that much money, all right? And so when you and I have a little bit of money, we have lots of options. For him, it can be very difficult. And even with gold shooting to new all-time highs and actually becoming the second best performing asset of 2020, of course, right behind Bitcoin, but most of the harsh Buffett critics were still pointing to all his comments that he's made over the last 20 years. Now, he's been very outspoken against gold, of course, so it's not a big mistake. Everyone's got it right. He has hated on gold. He said he would never buy gold. Quotes, let me give you a couple quotes. So one, at a speech at Harvard in 1998, he said, "Gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again. And people pay to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head," end quote. So yeah, obviously not a fan. And he gets that right. That's exactly right. You dig it out of the ground, you melt it down, you stand around and guard it. That's about right. During a 2009 CNBC interview, he said, quote, "It's a lot better to have a goose that keeps laying eggs than a goose that just sits there and eats insurance and storage." And a few things like that, end quote. Now, comparing, he was comparing basically companies that do things, that make things, that produce things. Companies like Coca-Cola, companies like Wells Fargo, companies like Apple. They do things, they make things, they produce things. A goose that keeps laying eggs. You buy the goose one time, it makes eggs for a really long time. Gold doesn't do that. Gold's like buying the egg and it just sits there, right? In a Berkshire annual meeting in 2018, he said, quote, "If you bought gold at the time of Christ and you figured the compound rate on it, it may be a couple tenths of 1%, end quote. Wow. So he's saying if you would have bought it, you wouldn't even have made any money. You just still have it. So that's what he said in 2018. So you can see he's not been a big fan. And I know this is why so many people think that he's been out of touch, but it's not that he's out of touch. It's just been his investing thesis. But if that's the case, and he's been so outspoken about gold, then why buy now? And most importantly, what does this mean for you and I? Well, I guess even more importantly, what is the specific play that we can make right now to make money from this? All right. Now I'm going to break it all down for you. All right. So first, Buffett's Berkshire Hathaway, they didn't buy gold. So that's a real key piece here. They didn't buy gold because, as he said, it just sits there. All right. Notice that his critique was that he wants to buy a goose that continues to lay eggs. He wants to buy a business that produces and creates things. That's not gold. That's not Bitcoin. That's why he doesn't buy them. He's not missing the point. That's just not his thesis. So we have to look beyond. He didn't buy gold. We have to look beyond the obvious implications of Buffett's new appetite for gold. And what we see is there's a much bigger story at play right here. And this is the one that most people are missing. It has much bigger, much far greater implications for us as investors, especially if we're looking for big returns in gold stocks. So let's break this down to see what we should be doing right now. So Buffett only invests with a long-term outlook. I've talked about him in several videos. We talk about how he buys companies and holds them forever, like a Coca-Cola. He's been holding them for 50 years. So he only invests with a long-term outlook. He's not a trader. He's not a gambler. He's not Portnoy, right? So you'll never really see him buying something for a quick flip. Now, if he buys something and it goes wrong, of course he'll get out, but that's not why he buys something. And I take this as an insurance. Not insurance, assurance. I take this to signal the start of a long-term cycle. If he's getting in for the long term, then that's pretty good to me. Now, for whatever it's worth, Buffett believes that the gold run isn't going to fizzle out anytime soon. That's what it tells me. So I've been telling you this, but now he's backing it up. This is the beginning of a trend. We're not at the top, all right? This trend is just getting started. And of course, Buffett starts the trends, he doesn't follow them. So he's not jumping on the bandwagon, he's starting the trend. He's already been in this for a while. Of course, the disclosures just came out. And we saw that Berkshire Hathaway reported the purchase of 20.9 million shares of Barrick Gold. Now that position is valued at $563 million, which sounds like a massive number, right? Wow, he spent $560 million on Barrick Gold. But let me give you a little bit of perspective. I always like to give the perspective on this. So to look at this in perspective, Berkshire Hathaway has about 500 billion. Not million, billion in market cap. And it typically buys into companies with billions of dollars, not millions of dollars. So for example, Apple, he owns 40 billion worth of Apple. B of A, Bank of America, he owns 22.6 billion. Wells Fargo Bank, he owns 20.7 billion. Coca-Cola, he owns $18.9 billion, okay? 20 billion, right? So think about that. So this 563 million purchase of Barrick shares, it's actually pretty small. It's actually really tiny. It actually is only representing about 0.1% of the Berkshire portfolio. However, Berkshire now owns 1.2 of Barrick Gold. So, Barrick could easily decide to control 10% of Barrick. He could buy 10% of Barrick, and it wouldn't even be 1% of the allocation of Berkshire Hathaway. And remember, like I said, Buffett starts trends. He doesn't follow them. So what this means is that Berkshire is only one of thousands of potential institutions that are going to all be scrambling to get into gold space right now. All right, now maybe one of the first, and he might be the first before the rush really starts coming in. And when these institutional investors from all over the world decide to follow Buffett and start buying gold stocks, and not just because they're worried about the inflationary pressures I talk about all the time from the Fed policy, but because gold miners are throwing off a record amount of free cash flow. So of course they want that. He wants to buy the companies that are producing things, and they're producing record free cash flow. And so when other investors jump in, what do you think is going to happen? The sector is going to absolutely explode. The entire sector of the gold mining sector is smaller than the market cap of one single technology company. So it's tiny. So when they start piling in, it can blow up and it can absolutely explode as the investors start to rush in. And that's basically where we're at right now. The moment right here, right now, when Buffett's getting in and leading other people in. Like I said, I think he's the trendsetter. I believe it's going to start the first of this trend as the herd start moving in, and then eventually lead to a stampede as everybody's trying to get into gold miners, specifically junior miners. Now, I think the returns on those are going to be astronomical. I've been talking about this for a long time. We've been making a lot of money on them. I get comments all the time. People that have been doing good just following the video, so I appreciate that. But let me give you an important point for us as gold investors, all right? For me and you, as I kind of said at the beginning, for me and you to throw around a couple $100, a couple $1,000, like we can invest anywhere we want, okay? But when you have billions of dollars, it gets way harder to find companies that are big enough, that are liquid enough, that will take your money. And so, with Berkshire Hathaway's market value, it's so big. Like I said, it's bigger than the entire gold mining sector is. He can't really buy a meaningful position in any of these small junior miners. Although all of us would like to be Warren Buffett and have the billions of dollars that he has as an investor, he has a disadvantage in some areas. So in some areas, of course, he has major advantages, but he also has disadvantages in some other areas. So it's, like I said, it's harder and harder for him to find the companies that are big enough to take his money. And so because of that, he's limited with his options. He can only invest in just a couple of the very largest companies, even though there's, way better opportunities that are out there where he could make many, many more times on his money. He can't do it. He's too big. There's no room for a guy like him. But for us little guys, that's a huge blessing. And this means that an investment portfolio that's weighted in junior miners, I believe, is going to blow away Berkshire Hathaway's performance, blow it out of the water over the next couple of years. But that's our benefit, not his. He can't do it. Now, in the beginning, I told you I was going to look at one of the best deals out there. So one that I've been eyeing is one that is about ready to break through, in my opinion. And when you compare it against Barrick, you can really start to see what I'm looking at. Okay, so Barrick Gold is the company that Warren Buffett bought. Again, he didn't buy gold. He bought a company that produces gold. So it's called Barrick Gold. The ticker symbol is GOLD, is gold. They've been around a long time. They got the right ticker symbol. Like I said, their market cap is about $53 billion. And that sounds really big, but of course, like I said, Warren Buffett owns over $20 billion of just Apple alone. So for him, he could just buy that no problem. But anyway, Barrick Gold, ticker symbol GOLD, market cap about $53 billion. And then we have a junior miner for comparison, like gold mining. All right. The ticker is GLDLF, and they're tiny when you compare it to Barrick. Now, Barrick, like I said, is the monster in the industry, which is why Buffett had to go there. But gold mining is tiny. It's only at $285 million for the whole company. But for small investors like us, it represents a way better opportunity. Now, if you watched my previous video where I taught you how to evaluate gold mining companies, the first thing I said that I always look at, the first thing is the team. That's right. I always start with the team because, as I say, a good team is not going to join a bad company. So they do a lot of the due diligence for us. Like if a good team moves in, I figure there's a lot of stuff that I can kind of look past and I can dig more into the financials and things like that. So we start with the team. And when we look at the team, gold mining is like leading the way on this. Their CEO, Amir Adani, he crushed the market with a uranium mining company. And this was during one of the worst uranium market cycles that we've had. And then on top of it, he's made so many good deals, which I'm going to explain in a minute. He's also recruited the who's who of gold mining to join him. So he recruited a guy named David Garofalo, and he recruited him to head up the Gold Royalty Corp subsidiary company. So it's a wholly owned company that they own. And David's the who, right? He's the former CEO of Gold Corp, which is one of the largest gold mining companies in the world. He was their CEO until it merged with Newmont Corporation last year. Now, you may not have heard of either of those two companies, but just let me give you an idea how big they are. This is basically like Pepsi and Coke merging. They're the largest companies in the industry. So he was the CEO of Pepsi. They merged with Coke, and now he went to go join this new company. You don't leave Pepsi to go work for a nothing company, right? So that gives me a lot of comfort. Then we have to look at the key shareholders. So when we look at the key shareholders, we have Rick Rule from Sprott Global. We have Marin Katusa, and a lot of people know who Marin is. I get asked about his stuff on my comments all the time. We have Doug Casey. We're talking about the biggest names in gold are all the largest shareholders here. They've all jumped in on this company, and it's because I believe it's extremely undervalued. They've all seen the same things that I've seen. And like I said, I just follow the team and look where the team's going, and they've assembled the who's who. Now, the company itself, we like to look at after the team, we go to the resources. And what the company did that I think was just genius is through the gold bear market. So from like 2011 to 2018, when gold was hated, when nobody wanted to be in gold, it was in a multi-year downtrend. You know the old saying, buy when there's blood in the street, so to speak? Well, during that time, gold mining founder and chairman Amir Adani, he went around and snapped up all these cheap, hated mines at the time when nobody wanted them. And just making acquisition after acquisition, he got in so cheap. And to put this into perspective, according to research by S&P Global Market Intelligence and National Bank Financial Markets, the average cost to discover gold is about $170 per ounce in the ground. But gold mining, because they were buying when everybody hated them, was able to buy them so cheap with so much gold resources. He got them for about as low as 50 cents per ounce of measured, indicated, and inferred resources. So instead of 170, we're talking about 50 cents. All right, that's a big difference. And they're sitting on lots and lots of gold, multi-million ounce gold reserves. In fact, over 11.4 MOZ, M&I Resource, and 13.8 Inferred Resource. So that's a lot of gold. And right now, another thing that I like about it is it's currently an OTC stock that's over the counter, kind of like a penny stock. However, at the time of this recording, it's about $2. All right. So what that means, it's not a penny stock anymore. It's at $2. So it's knocking on the door of being uplisted to the New York Stock Exchange. And when this happens, oh, watch out. The price of that could just take off like crazy. So it's another thing that I like. So I think this company has a way better outlook than Barrick. All right. But luckily for us little investors, the big Warren Buffett, the biggest investor of all time, he can't get into a little tiny company like this. He can't take advantage of these small plays. All right. It's way too small for him, but you and I can. Of course, when he brings all his buddies into the gold mining space, they're going to all find the same problem. There's not enough liquidity, which is going to bring the whole market up. It's going to benefit all of us. We're going to see these small miners with great teams and great resources turn into some of the biggest and best opportunities that we have today. So tell me what you think. Does Warren Buffett's entrance into gold miners make you more bullish? If you wouldn't consider buying a gold mining stock before, will you consider buying one now that Warren's in? If you would buy a gold mining stock, will you follow just Buffett's lead and just buy the same thing he buys, the majors? Or do you think it's better to try and scoop up some undervalued assets for cheap like gold mining? Let me know what you think. Leave a comment down below. I try to answer every single one. Give me a thumbs up on this video if you like it. If you don't like the video, that's okay. Give me some thumbs down. Either way, I always want to hear your comments. And that's it. That's what I got for you today. To your success. I'm out.